Okay. And we are live. A little bit late. My fault. Camera decided not to work. That's what happens when your phone's your camera.
Yeah.
How's it
Fiesta
going?
Friday.
We're
It
matching on the
is
black.
never a Yeah, that's right. Never a tame day in the market. A lot of volatility. You kind of expected with the Kospi showing what it was doing, negative 5% at one point in the overnight, and figured we'd probably get a pretty volatile and probably red day. And we've seen a continued sell off with tech. So that's for sure what we're going to talk about. Now, the sad thing is, uh, you know, I, I, uh, yeah, I joked around that CoreWeave is the play that doesn't ask if you want fries with that it's not a NeoCloud play. And now, if the portfolio keeps going this way, I might have to start asking that my own, Tevis. So, they just once.
Yeah.
No, still is bullish. Like the only thing that's really changed for most of these companies, there's a few. We're going to talk, a little bit of Google tonight. We need to talk ServiceNow as well. And then Fiesta Friday features a lot of Q&A. So feel free to ask questions related to the market. Or hey, if you don't want to relate it to the market, that's okay too. We'll probably hit some of this. Yeah, it's been a really brutal week. It's one of those where as the morning really accelerated, and I'm like, hey, there's no bounce at all here. I'm just gonna play more chess. I had the second half of the day off, so
Yeah. We can do some
did
of that.
not spend it looking at the tickers going down. What do you do on a day like this, Tevis, when it's just like relentless selling action after a pretty red week and it just keeps dumping?
So you want to know something funny, actually? I was on the phone with my broker today because they had a bug where I literally couldn't close my options contracts. And I'm like, there were covered calls that I wanted to close. And some were going through and some just weren't going through. And I was just like, all right, well, this is across multiple accounts, across multiple holdings. And they're like, we're still investigating. They took hours. I'm like, cool. So I'm assuming you guys are going to reimburse me for these losses that happened as a result of your system. Probably not going to happen. But yeah, that's Canada for you, Roy. The system just
That's
stops
fun.
working.
So, and your brokerage is not Robinhood. So
No, the brokerage is not Robinhood. It's Well Simple. Do better, Well Simple.
that's right. They took away the sell button. Yeah, something like that.
I mean, yeah. They took away the buy to close button on a red day. It's like,
Oh,
dude,
okay. Yeah, there you
I
go.
don't know how this is going to open. This could open up super green on Monday.
Yeah. No, it could. We'll have to see. Now, why are we selling off, Tevis? What's going on in the macro?
Man, I don't even know. Um, yeah, we can start wherever you want to start. Obviously, ServiceNow earnings is something that would be interesting to talk about. I think Google is definitely one of the reasons. We can talk about Jensen finally joining X. Congratulations to Jensen and his note. And yeah, where do you want to start, Roy?
Let's do some quick macro notes, and then we can jump into the individual. We'll talk Google, and then Tesla also reported too. Though I think there's a little bit less to talk about than those names. Uh, so this was yesterday. It was one of those which we'll get into the Google specific, but man, the Mag 7, it was actually really kind of shocking to me, Tevis. My portfolio wasn't performing like terribly, but the Mag 7, like it was acting like it was just a bunch of high beta stocks. And it's, when you see something like the Liberation Day type thing, you're like, okay, yeah, of course it's going to sell off. After really good, solid Google earnings, Teslas were not the best, frankly. There were problems with Google earnings. It wasn't perfect, but I was like, okay, what's going on here? And like, there's a few pieces that's happening in the macro. So one, of course, is related to Iran heating up. Well, I'll pull that up. Well, no, that's the wrong one. Right there. President Trump meets with top advisors as he weighs a major escalation in Iran. And yeah, I mean, like we just keep hearing things are ratcheting up, things are ratcheting up, things are ratcheting up. And man, that's something that absolutely can drive inflation. It's the one bear thing in the macro that I'm like, this is actually worth paying attention to. Most of the rest isn't. We've seen the impact of this. So we can see, of course, the next meeting is this next week. We're going to get a very good read on exactly what's going to happen. Sadly, a lot of fintechs also report at the same time. So I guess that could be good or bad. depending on your perspective. But right now, we're looking at entering that meeting that there's about a 40% chance of a rate hike. Now, what's really unusual about this, and I think maybe we'll pause, Tevis, and I want to hear what you'd have to say as well on rates, inflation, Iran. Um, Under Powell, by the time you got like within a week or two of that meeting, you had like really really good certainty with a few exceptions. I mean, you could go back to 2022, but over the last few years, that's one of the things that we've actually enjoyed in the market is the scary thing is well before the meeting, but when we're looking at this close, we'd see like 90, 95% something. This is about as far apart as I've seen. End of the year matters a lot too, but I think it's really interesting just to see that spread going to this meeting. And we can see right now the consensus is not that we stay where we're at. Only 7% of people think that. We're looking at one hike, two hikes, maybe three hikes as well. And this has shifted quite a bit. So a week ago, we were just at 28% chance of two hikes. Now there's almost a 40% chance. So Tevis, I guess with the Iran situation, with the FOMC meeting this next week, what are you thinking?
So I want to show this, right? Like similar to what you were showing, except it's poly market. Look at that. It's a pretty even split. 33% think two hikes, 32% think one hike, 31% think no hikes. Nobody knows what the heck is going to happen, what's going on with Kevin Warsh. And in my opinion, I don't think that they should be hiking because I think if we do get a hike, it would be short lived, followed by a rate cut maybe 6 months after. That doesn't really help the economy. And the reason why is because these things take time to actually go into effect. You're not going to see something happening like a rate cut or a rate hike happening and then the consumer is affected, almost immediately. Yeah, sure, you could say like revolving loans and mortgages and things like this, but we really see the impact of Fed decisions 9 months to over 12 months away from the decision, right? For it to actually be embedded and rooted into what happens. And so the jitters that we have right now, I think not only do we have volatility in equities markets, but we also have volatility in people's sentiment. And a lot of people are just hedging their bets. The Fed doesn't know what they're going to do. Poly market doesn't know what the Fed's going to do. And overall, it's on a touch and go basis over the next several weeks. And I just think that the best course of action in that scenario is to stay put until you have some level of certainty. So I don't think they should hike in July. I don't think they should hike in September. But I understand that the case is getting stronger and stronger for a hike in September as this conflict continues, as oil stays elevated, as inflation stays high. So I don't know what's going to happen. I'm with everybody else on this one.
Yeah, that's I think helped fuel today too and made it more volatile than it might have been otherwise. It was going to be volatile no matter what with the uncertainty with Iran, with what's happening in the Korean markets as well. But yeah, I think that we might see a continuation of this really until like volatility. It's not going to fall straight down in a straight line like this. We might have like a rip roaring green Monday and then a down 5% day on Tuesday and just turbulence all over the place on Wednesday. I think that, hopefully they're a little bit more clear as far as what they're thinking and, they give some of the market just more certainty one direction or another. Markets do not like uncertainty. And so it's not too surprising to see people taking some off the table today. For you, Tevis, are you like, hey, this is a sell everything and just wait on the sidelines mode? I know, of course, it's not for you. But like, are you doing anything in anticipation of the Fed? Any hedges, any bets, any things that you're changing?
No, like I said, there's nothing that I'm doing. I'm in a wait and see holding pattern. And the reason is, I think the macro thesis is still intact. It's just a matter of waiting for it to play out, right? The way that I've positioned my portfolio, I have a big concentration in Amazon and in Meta. I have a big Nebius position and a CoreWeave position. And then I also have, ServiceNow, which is kind of like a counterweight to the data center plays. And then I also have like SoFi, which, it's kind of like a no man's land. So my portfolio, and then I'm also running the wheel on the entire portfolio, right? So my portfolio is not like all in on one thesis, right? You have this Like ServiceNow, for example, is getting hit by the thesis that AI is going to destroy software. And meanwhile, I'm also in the AI play, right? And you have days, for example, like my portfolio was all red today, except ServiceNow was up almost 8%. And so these are good counterbalances. I also have VG, which is up on days when the market overall is down. The high beta names are down, right? So generally
It
speaking,
has been today. I was surprised actually. I
yeah, it
wasn't
was
paying
down
attention to
today.
the second half of the market very closely, and I looked in. I'm like, VG's down like five something percent. I'm like, TTF is up. Okay, whatever. Yeah, but yeah, go on. I'm sorry.
Yeah. So what I'm saying is like I'd be much more nervous if like it was February and I was very heavily concentrated onto like one name and all my options contracts were around one name as well. And thankfully that played out and I unwound those positions. I'm not like, in margin or anything like that. Now, obviously, if this sell off continues for a prolonged period of time, then I will be in margin. Like I wrote cash secured puts on Amazon. I have them on CoreWeave. I have them on Nebius for the next several months because they're very lucrative from a premiums perspective. But my point is if you set up your portfolio in such a way that you don't have to look at the market or the volatility doesn't affect you as much. Like for me, for example, Nebius was down 15% today. And I thought, okay, that's great. Don't look at what the on paper losses are. Those looked horrible today. But on the flip side, I opened covered calls 2 days ago and I closed those covered calls for a very healthy locked premium. And thankfully, I closed them before my broker started acting up because I would have been really pissed if my broker just stopped me for those. But the point being is you can always take advantage of this kangaroo market that is undecided as to what direction they want to go into. Because if you're an option seller, then the volatility is good for you.
Yeah, no, it mostly is. It's not a lot of fun. Like it's one of those. It's a roller coaster market, and until we get a little bit more certainty, I think with rates and certainly with what's happening in Iran, both are tied together. It may be choppy like this. Of course, we have a lot more earnings this next week and over the next couple of weeks, and so let's talk about those earnings, Tevis. And I'll leave it to you. Do you want to start with Google? Do you want to start with ServiceNow?
Yeah, I mean, look, I can start with ServiceNow, and then maybe you can walk us through Google, and we can sort of take a turn like that. Does that sound good?
Mhm.
Okay. Let me bring up this post that I recently made around ServiceNow earnings. And honestly, man, this was one of the best earnings calls that I have heard from an executive. Bill McDermott is fired up. This was like, a reality TV show in an earnings call. It was fantastic. And if any other CEO out there should be taking notes as to this guy's level of enthusiasm, these are some of the high level notes that I made, right? ServiceNow beat every single number and the stock went down. Subscription revenue over 25%. This was above the high end. The CRPO, which is the main number that I was looking for, this is the remaining performance obligations. So, because they have annual contracts, we're looking to see if the demand is holding or if, in fact, the thesis that AI is going to disrupt ServiceNow will play out. This was higher than their guidance. They guided for 19.5. Really, I said above 20 is what we want to see. We saw 21.5%. This translates to about $13.2 billion, by the way. Operating margin
Okay.
beat by 3 points, including the Armis acquisition. People said the Armis acquisition was going to be a drag and it's going to actually lead for them to lose their numbers. AI revenue, the ACV from AI crossed $1 billion and they're guiding to beat their $1.5 billion target. They're making real money from AI. They're growing the fastest, one of the fastest that's software companies that's benefiting from AI. Bill McDermott told you they're the eighth largest cybersecurity company in the world and the fastest growing of the top 10. They said that cyber will be bigger than all of ServiceNow is today within a few years. Okay, so this is a very well diversified company in terms of their offerings, alongside the Armis acquisition and the other two acquisitions that they made earlier this year. Like this company's offerings now, especially when you add in the AI orchestration, the agentic layer, then this is something that they have a depth of offering where they can sort of bundle these offerings and be available to their enterprise customers. I mean, they also had their enterprise customers. I don't have it here, but uh, maybe yeah. Hold on, let me pull it up here. It's in here. They have their enterprise customers who are over $5 million in ServiceNow, and that number is just going up and to the right. Here you go. So, number of customers with 5 million plus ACV, 658. The average ACV of customers with over 5 million, $15.2 million, right? So, the customer relationships are expanding. How are they expanding? Well, they're expanding because ServiceNow has all of these other offerings that they can cross sell. They're expanding because it's entrenched. You can't really get rid of ServiceNow after you've onboarded them, especially as a large enterprise customer. And the other piece, Roy, that's relevant here is that Bill McDermott, the CEO, talked about the breadth of their offerings, right? He mentioned an example from the city of Raleigh, North Carolina, how they're leveraging ServiceNow. Not only are like the top companies in the Fortune 500 leveraging ServiceNow, I think over 90% of F500 companies are leveraging them. They have a wide breadth of offerings that they can cross sell to all of these different entities, from private companies, public companies, governments. And he also, Roy, teased a new product offering that is going to be releasing in the next couple of weeks, that they're going to be announcing, that he says expands their total addressable market. Chris and I, we were speculating that this is going to be a product that is offered to mid-market sized businesses, like the smaller businesses that they can cater to, not the pure enterprise, like tens of thousands of employees, but smaller businesses, so that you can actually grow with ServiceNow. 7 analysts raised their price target. The average price target is over 50% of where the stock is currently trading at. We're trading under a 1 PEG ratio, and yet after all of that, the stock was up about 6% in after hours, and it gave up all of those gains and it was down 4% the following day to $92. Yes, it's regained all of that. It's at 98 right now. But man, oh man, this is a company that is really strong. And I want to add more, quite frankly, because I don't think that they should be trading here. I think they should be trading much higher, especially with what they're doing. The diversification of their offerings and their acquisitions layering in is going to help them from a margin expansion perspective. I mentioned to Chris, like, this really has echoes to me of what Palantir did with AIP back in like 2022, because their growth rate was sort of in the 30%, and it fell as low as the mid-teens. And then when AIP was introduced, they started cross-selling that through the the, what do you call them, like the mastermind sessions, the group sales sessions that they were hosting for these the boot camps that they were hosting for these companies, and the growth rate turned around completely. And so I speculate, obviously maybe not to the same degree, but I speculate a similar trend might happen with ServiceNow as we further entrench into AI use cases. ServiceNow is actually going to benefit as opposed to being hurt by that, because not only are they making money from AI, but you also need cybersecurity, you also need governance, you also need the orchestration layer, everything as a package offered to you out of the box by one company. And so you're going to do more money with ServiceNow, and ultimately, I think they're going to be fine. Sorry, that was a lot of rambling, but it was all top of mind because I just finished making a video about this.
So on the call, I agree with you. It was really well done by Bill. Just people were revolting when the CFO got on, but that's typical when you have a fired up CFO CEO that's very dynamic, and it was very good. Earnings, very, very, very good, actually, too. So it was one of those that I think if the market wasn't as choppy, we might see ServiceNow up double digits. But there was a couple of things that I wanted to ask you about. So one was, and you were with Chris streaming it. This I thought was a pretty fair take with Chris. So we saw some interesting things. First, he notes IBM. And IBM just, I don't know if you saw the price, but it collapsed this week. It just got shellacked, and I'm sure today it got all eaten up as well. And bottom line is this quarter we faltered, and they mentioned rapidly evolving industry-wide cybersecurity concerns. Chris noted, and of course he picked up on that with Pega as well, and so he reduced some of his position in ServiceNow, just seeing that. Now, it looks like Armis, that acquisition, the pivot into cybersecurity, and that's where a lot of the growth is. That's where there's a lot of higher margin products. That's where it seems like they're thriving. Is this still any concern for Chris or for yourself as far as what's happening with IBM and Pega?
No, and I think Chris got back into his ServiceNow position after the call. I mean, look, for Chris, I asked him about this live, on before the call started for ServiceNow, and he said it was just a portfolio management thing. He was really heavily levered because Chris is in it with options, right? And it's a very different profile than being in it with shares. And he wanted to take some risk off the table. Keep in mind, man, 1/4 of Chris's position was $500,000 of options in this one trade. Like, people need to start to like take a step back, and then he got in it. I think he tweeted about it, that he got back in after the earnings, and the reason is because, like, I think similar to how I assessed it, the earnings was actually very well done, and very bullish. But ultimately, yeah, a lot of people were bearish going into ServiceNow earnings. And if they didn't absolutely knock it out of the park, this thing would have gotten hit way, way harder. Like, the call was amazing. They double beat, they raised guidance, they sort of assuaged the market's fears on everything that the market could have had, and yet they still fell 4%. So imagine if one of those things hadn't happened. This thing would be down like 15% or more, right? So for Chris, I think it was a good move, to sort of hedge his bet, but it doesn't really speak to him being more bearish or anything like this. I mean, I asked him after the call, like, hey, what do you see as your price targets going forward? And he was saying very conservatively, by the end of next year, 150 to 200 is fairly conservative. And like, people in the chat were saying, oh yeah, that's like, not good enough. Like 150, like, guys, 150 is 50% from here. 200 is a doubling of your money from here.
Yeah.
You can also invest in the S&P 500 and get 15% for the entire year, right? So, like, I don't even know what people want anymore, man. Like, the sentiment is against them. The chart is in a downward spiral, and ServiceNow has absolutely gotten disproportionately hit from that. It's oversold, in my opinion, relative to what the business is doing, because the business is consistently proving that they're knocking it out of the park. And this is not a feeling, this is a fact, right? They like look at the numbers and what they're doing and look at the guidance that they're providing. So in my opinion, if you think a 50% return is too slow for you, then I'm sorry to say, but I think you're the problem.
Yeah, I mean, like, it's a great return, especially in the current market conditions. You can make more, of course, in individual plays, but man, smile, grin, and be happy if you make 50% over that time. Okay, so ServiceNow, beyond that, like, the one thing that I'll push back on you is, like, whatever this new product is, we don't know for sure, but if they are moving downstream to smaller enterprises, I would say, I don't know what the product is, but I would say it's probably fundamentally different than AIP, and it's the bootcamp strategy itself. Like, the reason why it worked for Palantir is because their product is that good, that they can demonstrate that immediate ROI using the actual data, using an actual use case. It's not just a sandbox thing. And most companies, probably including ServiceNow, don't have the product for that, and they don't have the talent for that as well. So when a company moves downstream like this, it's a different style of sales, and it can oftentimes be slower when you're trying to introduce a new product. And so I wouldn't, okay, let's throw this up real quick. The actual revenue and everything.
Why are they the problem? It's because the expectations are entirely unrealistic, and that's going to hurt them over the long run as opposed to help them, because we are in a crazy year right now with AI that almost normalizes these like 100% returns on random AI companies. That is not normal. Okay. If you fast forward several years from now, like, or maybe rewind several years from now, 100% return is something that happens in the market from time to time, but it's not the norm. If everything went up 100%, like, you'd have a lot more millionaires out there.
Yeah. Oh, I was pulling up something different, but yeah, the remaining performance obligations increased, right? Or were they? I remember reading something about it. I don't remember. I remember it was significant, but let's actually pull that up, because total remaining performance obligations.
Yeah, this is the number that came in at 21.5%. It's like 13.2 billion or so.
Yeah, 29 billion here. So, and I think that was the only like real disappointing thing that I saw out of the quarter. I think that the expectations were higher there. Now, as far as like the growth rate, this is what the growth rate is in terms of revenues. And some of this with ServiceNow, just because they do acquisitions, and I'm not like saying acquisitions are bad. It's just some of the growth rates that they've sustained in the past is simply because they take on an acquisition. It takes time to digest that. and it's a year out before you're comparing apples to apples. So I wouldn't expect personally, and I'm kind of curious with your thoughts as far as what this product might be with AIP, the reacceleration of revenue. I would guess that they're going to probably see a very similar range as what they've enjoyed in the past, like in the 20s. I don't. I think that this was an aberration. That we can surely say that, but I would be surprised if it's much higher than the 25% and much lower than a 20% over the next year. That seems to be what a lot of analysts are expecting as well. Tevis, are you expecting something more than that? And if so, like, what are you expecting as far as what the revenue rate could be in the next year or two with the new product?
Yeah, I mean, look, I think they're going to conservatively guide, and they're guiding for what, 20.5%, something like that. I think that was their guidance, around 20 to 21%. And the new product can definitely have upside, but as we know, that a lot of these products are going to have investment before then they have the return. First of all, second of all, if I knew that I had a killer product out there, why would I increase the guidance expectation to 24% or 25%? I would just keep it as it is because it still is a raise on my current guidance, and I can surprise to the upside when that does come out, if in fact the take rate is as aggressive as I think it's going to be.
Yeah, no, yeah, it's certainly like we don't know what the offering is, so I just would guess that it's probably like you're not going to see much higher of a growth rate than here. But that to be said, like where Silver's now is trading, it's under $100 a share. If you look at the price earnings growth, if you look at earnings, if you look at margins and everything, it's an attractive price here. I'm not saying like mid 20s is not good enough. It absolutely is for ServiceNow where it's at. I just, wanted to say something in case somebody was taking your comments and like, oh man, they're going to grow 50 or 60% next year. It's like,
no, not at all. But
no.
like the market is pricing them as though they're going to be declining growth and getting disrupted and actually, going to go to zero, quote unquote. And that's not the case. And I think if all you do is you prove that that's not the case, this thing will go higher, right? Because it's oversold as it is. And the reason why it's oversold is because people believe that to be the case, that they're going to get disrupted. They don't need to accelerate their growth. If they keep their growth rate entirely consistent, this thing will go much higher. By the way, let me just read these donations.
Yeah, you got a few gifts there.
Thank you, Joppy, for becoming a new member. Star Buccaneers donated 2 jewels to Roy. I don't know what a jewel is, but
yeah, I was gonna ask what that is. I don't know what that is. So I like it if it's emeralds or something like that. That's cool. No, I don't know. YouTube's always doing something different like that, so I guess I'll find out.
I feel like I don't know what. Hold on, let me. I just asked Claude, so let's see what a jewel is, but we'll circle back to that. Express said, "Here, take my last $2." I mean, they're New Zealand dollars, so they don't even count as 2 real dollars, Express. But thank you, thank you very much. And Highland Harper, the big hitter, with a 20 gifted subs. Holy, this is, I think, the biggest single gifted sub donation that I've ever received. And Highland here says it's Nebius call premiums, and I'm glad that you clarified that, Highland, because I was going to assume you were short the market for going so big. Thank you so much. I really appreciate it. Ark donated $5 to Roy, saying thank you for the Friday evening sanity check. Thank you so much, Ark Singh. Okay, a jewel. Okay, you ready for this? Is a live stream gifting tipping feature that YouTube rolled out. Viewers buy a virtual currency called jewels and then spend them on animated gifts during the creator's live stream. Those gifts turn into rubies for the creator, each worth about 1 cent, which counts towards earnings.
All right. Thank you. YouTube, yeah. When are they going to give us confetti? I mean, they just need to gamify the whole thing here. So, no, I'm joking. They actually kind of have that. So, yeah. So, going to one other thing on earnings. I guess real quick, were there anything that did you look at the Tesla earnings or pay attention to the Tesla stuff?
I did not. But let's talk about Tesla as a separate topic, because I'm kind of curious to get your take around when does this become a buy? Is this a buy? Is Elon the former trillionaire? What's going on there? So but let's talk first of foremost about Chris Patel said, looks like me and Tevis are the real winners in all this. Yeah, with service now. I mean, look, man, if that's all you look at in my portfolio, then yes. But everything
Yeah.
else is just eating shit today.
Yeah, I should note, by the way, Chris made money on that trade as well. Like he was wrong about ServiceNow, and yet he made money. And I'm not saying that to take away from Chris. I'm just saying he did the right thing of like, hey, I'm cautious. I'm going to make a move, and it paid out for him. You always have to be careful with earnings too, because you could be right, and the stock moves in the wrong direction for you, or vice versa. And Chris is a smart guy, so. I got 440 joules. Okay, Rapucci, thank you so much for those.
Unk alert, this is accurate. We don't know what the hell a joule is, man.
No, yeah. Yeah, so Tesla, of course, has retraced quite a bit. I actually didn't see where it fell by the end of the day. Let me pull that up here.
Dude, this is probably stronger than the Canadian dollar, no joke. I kind of want to see what an Iraqi dinar is worth. So CAD to Iraqi dinar. Oof. It's actually way closer than you'd think.
Oh, man.
No, that's a lie. 1 Canadian dollar is worth 928 Iraqi dinar. How much does, like, what's that equivalent to? I want to know what I can buy. What's $1 equal? Okay, yeah, $100 or 93,000 Iraqi dinar. I don't know. We'll call it close. Roy, go ahead.
All right, so Tesla fell off a cliff. A lot of it has to do with just what is happening in the market today. Mag 7 yesterday as well just took a beating, which didn't help. But it just absolutely dumped. It's now down 28%. Quite a ways from the peak, I think last December. And it's been brutal. And of course, you and I don't have a Tesla position anymore. And so in the earnings call, a lot of it related to, there's a couple of things, but I think the biggest thing that surprised the market was that margin was actually compressing. And that's not really what you want to see. Some of the earnings actually look better than they would, just like it is with Google, just because of the unrealized SpaceX gains that are there on the balance sheet. And so, when you first read and you hear about this like a crazy beat, that's what it was as far as the earnings. But Tesla, obviously, like, it's not a company that we hate. It's not one that we're like, hey, we'll never touch it or anything. It's still trading at quite a premium. So I guess, Tevis, since you posed the question, do you have a price that you'd be interested in getting back into Tesla? Or is it that you're waiting not so much for the price, but for something else?
I asked the question because I don't want to answer the question, Roy. Let me take a look at Tesla right now. So Tesla is currently sitting at $313. And the only thing that looks worse than Tesla right now is SpaceX, which is sitting at $115. Holy, it reached $110, Roy. This is, I think 200. These guys are saying 200, 220s. I think that would be a great range to get into Tesla. Whoa, Joppy with the 20 gifted Crossroads memberships. You guys,
thank you guys. Really appreciate it. I found out, by the way, Joppy is Duckhammer. If you remember Duckhammer, he changed his handle. So I wondered what happened to that guy, and it's like, oh, Joppy, yeah. So thank you. So I agree with that. Like, looking at Tesla, and this is one that you can push back and say, hey, it's probably not going to fall there, but we've seen that. I've seen that several times now when I'm not in Tesla, or I have a small position, but I'm looking to add maybe, and I just wait, and eventually the market seems like it does give a buy. Man, that's amazing. Congrats. The market does give it into the buy range much lower, and it's still expensive at 200, but I agree that it's a lot more interesting there. Now for you, it's a long ways away where it's in the 300s, but would you try to enter through a cash secured put, or would you be like, hey, I'm just going to, Is there a price where you would just, because I know you prefer to do your entries mostly through the puts, especially when they're volatile. Man, Highland, thank you guys. You guys are going nuts.
What is going on? Do we need more red days, guys? Is this what's going on? Do we need more pain for you? Like, what is this? Thank you so much, Highland. I really appreciate it. Wow.
So is there a price? I know most of your entries are just through cash and puts. You take advantage of the volatility, you make some extra money if it doesn't fill there. There's a price where you just like, I'm going to hit the ask button right there. I'm going to buy it right there. And man, Duckhammer, Joppy, thank you. Enjoy the memberships. There is a little bit of membership content now that I'm doing, but it's mostly there. It's just out of support. But you guys can watch that Voyager video if you get one of the free memberships. If you're interested in the space names, why I'm interested in that name itself. I'm not in it yet.
What
But,
is going on, man?
yeah.
Whoa. Okay.
Love
Yeah.
our community.
We have millionaires beefing with each other over donations. Yeah, I don't even know what to say. We have a lot of bears in the chat. That's for sure.
Yeah.
Look, what I'll say. Stop.
Oh, Highland.
Oh man. What the heck is going on, dude?
You might have to make some membership only. I might too. A little more membership only content. So, yeah, that's a good problem to have. Thank you, guys. Thank you, Joppy. That's it. You guys really don't need to, but we do appreciate it. It's very kind. Okay, so Tesla, is there a price where you'd be like, let me just buy it? I'm not waiting for it to fall. I don't want to miss this price. What, and if so, like, what would that price look like? Is it just like so much lower it's not even worth talking about?
Yeah, like I think if we enter the $200 range, then I would definitely be interested in Tesla, especially because don't forget, man, like we're gonna start the production of the bots here very shortly within the next 12 months or so. And holy crap. Thank you, Express. This is like, dude, you guys are making me feel better about losing a lot of money in the market today. Yeah, I think but Tesla's not going to be interesting to me at these levels. Let's just put it that way, because I can't get words out because of these guys.
Yeah, it's
much, guys.
Yeah, but I agree with people. It's like if you're interested in Tesla, like it'll probably take some time. It's not going to fall down in a straight line, but like we could see in the current environment that doesn't like debt. And if you look at, by the way, the similar phenomenon of what's happened with Tesla, maybe even a little bit more extreme might happen with Google. So let's go ahead and pivot to Google right now. The thing with Google that I think took the market a little bit by surprise. If we look at the free cash flow, let me actually remove the percent change because that's not that relevant. So if you looked at analyst projections, most were not projecting this quite yet. This is negative free cash flow. Now, it shouldn't surprise people. Like we knew that this was coming just with the CapEx build out unless Google came out and said, hey, just kidding, we're actually not going to build all that stuff, which would have been actually really alarming and shocking, and the stock might have sold off anyway. But if we zoom out and we could go even further, Google has never, literally never, I thought it was like, this is like a once in a decade type thing. There's never been a time since they've been a public company where they've had negative free cash flow. And so to go from this, where it's just like absolutely robust, and it's on the back of the CapEx, it caught the market by surprise. It caught algos by surprise. But there's a reason for it. It's just related to the CapEx. So nothing that's like was really, really bearish in this. In fact, there's quite a bit that was bullish on data centers. We saw them move after the earnings and then the next day as well for a little while. And of course, here today, we're just getting sold off left and right. So Google itself, if we look at stock price action, yesterday it was just a brutal day for shareholders, despite a very strong earnings. And today it just kind of consolidated. So a lot healthier market. If we look at it year to date, it's basically flat on the year as well, and a lot of good numbers. So Google, I know that it came out at the same time as ServiceNow, Tevis, but was there anything in the earnings that you liked, you didn't like, that you thought contributed to this? And then we'll talk about some data center stuff as it relates to this too.
Yeah, I didn't really see Google's earnings in depth. Obviously, like their backlog looks amazing. The third-party comments that they have were fantastic. Let me just throw that up right now around, obviously, Nebius and CoreWeave. Here we go. And I'm wondering, here we go. Mr. Chris Patel made money on service now, donates $10. Love it. Thank you so much, Chris. Very much appreciate that. We'll spend it in Mexico, sir. Here we go. I said, could we see a Nebius deal with Google soon? I'm procrastinating on a video about this, but I'll make one very shortly. Google is actively taking on short-term, high-cost contracts with third-party compute providers to fulfill immediate cloud customer demand while their internal data centers finish being built. This is bullish. And here's some quotes that they had in the opening remarks. They said that they plan to expand the use of third-party capacity in Q3 as a bridging strategy while they build out more internal capacity. During the Q&A, they mentioned it again. And then obviously they talked about the ROI of these customers. And you know what's interesting that also surfaced, Roy?
What's that?
Do you know who these gentlemen are? Can you name them?
That's the Backstreet Boys.
Yeah, they might as well be. They might as well be.
Boys to Men.
Look at this beautiful immigrant right here. Who do you think that is?
I'm not sure, actually.
That's Arkady. That's the CEO of Nebius.
Okay. Man, he looks different.
Right? Do you know who this is?
No.
These guys? They're the Google co-founders, Larry and Sergey.
Yeah. Okay, yeah. I do see the resemblance now. Larry Page and
Sergey Brin, yeah.
Sergey, yeah.
Yeah, it's yeah, so they go way back, Roy. They go way back. Okay. Obviously, we know Arkady with regards to the Yandex ties. Yandex, was like the Russian Google, so it kind of makes sense that these guys were in each other's circles. But guess what? Arkady now has a little company called Nebius. I don't know if you've heard of it. And
I thought you were gonna say Arkady is Tanner's dad.
Yeah.
Which is why he's in CoreWeave now.
Yeah. So Nebius, Google, could it happen? Let's put the tinfoil hats on.
So on that, I think there's something to that, not just Nebius, but I think it's multiple. And what we've seen with some of these larger enterprise giants that need extra capacity, whether it's for short term or not. By the way, like the in third quarter, I don't think we should read that as, even though they did talk about this offset of lower margins in the short term because they are using third party products, but in the long term, it's highly, highly accretive. I don't think that we should read that to mean that they're going to just want this bridging contract for like 6 months or something like that. It's going to probably be over multiple years. We know the current build out of Alphabet's data centers. We know what they've announced in the future as well. And I think they realize like, hey, it's probably better to have supply tied up than not right now, especially with just like what was happening with Meta. You have people knocking on the door saying, please give us this product. We need it desperately. It's just so hard to find. Like it should be very bullish data centers. Frankly, it is, whether the market realizes it or not. But I don't think it's going to, like with these, going back to Nebius and Google, I don't think it's just going to be, Google is going to say, hey, Nebius, we're going to get all that we can from you. I think it's probably going to be Nebius, CoreWeave, could be Iron, could be somebody smaller as well. It's probably be a combination of like 2, 3, 4, depending on how much capacity they actually need. And it's what's happening is a bit like an orchestration model when it comes to payments, that you don't want to, when you become a giant, you don't want to be reliant and beholden to just one party. You want multiple because there's a layer of redundancy there, and then some are actually better than others. A lot of pieces to it. So I don't know, like as well, like if these will be. It's tough to read like how massive these will be and how long. So I'm kind of curious what you think on that. Is this going to be like where they? Obviously, I don't think it's going to be 6 months, but is this going to be like they're going to look for like a 3 or 4 year deal? Are they going to lock up things like Meta did through 2031 or 2032? What are your expectations there?
The problem is that Google is saying this as a bridging strategy for Q3, and I don't think they're going to get any capacity in Q3. Like it's all sold out, right? Unless they're seriously overpaying. Unless this was like, oh, the Q3 is just planning for the future. I think it could be something like Microsoft, or sorry, like Meta, where they start small with 3 billion, 5 billion, like whatever a small amount would be, and then they expand out as that initial capacity is starting to go online. Of course, we have the Vera Rubin story now because it's the second half of the year. Both Nebius and CoreWeave posted around their Vera Rubins going online, and those are in high demand as well. So we'll obviously see what happens. But I think Nate was saying this in the Data Center Monthly. Nebius announced the Meta deal like pretty much on the earnings call a couple of earnings ago. So if Google is starting to say this in their earnings call, well, Nebius is going to be reporting in a couple of weeks. So, of course, that could be an upside surprise potential, which just makes the premiums even better for a covered call perspective.
Yeah, on Google as well, like going back to Google rather than data centers, like we did Data Center Monthly, so if you guys want more data center content, go watch that video. You'll get a bunch as well, but feel free to ask other questions. But the other things I think that the market didn't particularly like, beyond just a free cash flow negative surprise, was they accelerated CapEx by a little bit more than people were anticipating. I don't think that we should have been shocked by it. The market shouldn't have been. The margin comment going forward as well. And then we saw here, this was yesterday. No, this was actually the same day that hit Google as well. Oh, nice. Yeah.
Do we want to see this or nah?
Nah. Well, I guess we can ask the audience. The audience might be like, yeah, let's see. But if you could throw this up real quick here. They got fined again by the EU, and this has just been a continued trend. Something that they actually had 2 different fines that total nearly $1 billion US. A lot of it deals with anti-steering, which is kind of ironic too, Tevis, because I just posted a piece on Google like saying, hey, if there was going to be a counterparty to come in and bid on PayPal, Google benefits a lot. And it's not primarily from what people think as far as payment processing and the brand. It's agentic commerce, and it's all that rich data for their advertising. And they talk certainly a lot about UCP in the earnings and also advertising. That's what they do. But Trump was not pleased with that, of course. And we've seen this a lot with the large cap tech companies. So I'm kind of wondering if this accelerated the pullback that we saw there on Thursday after this fine was levied. He noted after having fined Apple, wouldn't really be for no reason, but for no reason at all, according to him, $15 billion, Meta $3 billion, Amazon $2.5 billion, and then this $1 billion for Google as well. This brings the Google total to over $18 billion. Does this concern you? Because I know you own some of these large cap, the hyperscalers. And do you think that this is perhaps one of the reasons why Google is also pulling back?
I mean, look, man, Europe, it's a running joke at this point that this is something that they just do. Like, what is that expression? The US innovates, Europe regulates, China imitates, something like that.
Yeah, throw up Zomzom's comment there at 652.
652. This one?
No, one right before that. There. EU just finds US companies to make money. It does feel a little bit like a small town, like in Texas or something, where you're driving around and they have like these speed traps with like really low. I haven't gotten a ticket, so I'm not saying this from personal experience, but when you get ticketed, I have in other states to this. It sometimes feels like that's how this town makes revenue, is by imposing fines on people as they're passing by. But they're doing it at a large scale to these hyperscalers. So,
yeah, I wouldn't be surprised if the European Council has quotas to be like, it's a tough year this year, guys. Let's go poke on big tech a little bit.
Yeah, it certainly doesn't help the price action. $1 billion, like, it's not that much really for Google. But the thing is, over $18 billion of fines over the last few years, and at a time when their free cash flow is negative, not forever, but temporarily. Yeah, it's not the greatest thing. So before we pivot on to Q&A, where do you think Google goes from here?
Higher. Wait, in what time frame?
The rest of eternity. No, not really. Let's say over the next through the end of the year.
Through the end of the year, yeah, it's interesting. Ultimately, I think higher, But really, like these guys have to prove out their capex, and that's been something that I've been echoing all throughout 2026. Roy, is because capex is still being sold off. I mean, Google raised their capex by like 15 billion, and they lost. The market lost like 700 billion like the next day because it dragged down everything. Like people are like, oh yeah, let me sell off Meta. Like, why do I have to wait until they report next week? I know what they're gonna say because I know what Sundar just said, right? Um, Capex and especially the negative free cash flow, like all of that is being seen as super negative because AI is still a black box in terms of how much ROI is it actually going to bring? How much is it going to expand margins? How much is it going to be capturing new total addressable markets? Once they start to prove that out, then I think we're going to be going higher. But until that point, it's going to be choppy, right? The market is very skittish about these things.
Well, so I submitted this as evidence of ROI, at least for Google. Like, I don't own Google. I'm not like the most bullish person. I'm not bearish on Google by any means. I do think that they're probably going to be range bound for a little while, maybe through the end of the year, maybe for a full year. A lot of reasons for that. But one thing that I thought really illustrated like ROI, and some have said, no, that's not really ROI, which it's not all because of AI, is this piece right here. So we look at Google Cloud, and let's look at it in a quarterly standpoint because it's even more impressive. Like, dude, it's growing 81%.
Insane.
Now, would it have grown as much without, or would it have grown some without AI? Like if they just punted on AI like Apple? Yes, absolutely they would, just because the nature of the cloud and cloud compute and where they're at right now. But this is, I mean, like, I don't think that Sundar, like, I don't think he's like the best CEO on the planet, but he's a good CEO. And the people that are leading Google are not idiots when they're talking about this opportunity down the road. It's not so it's not so hypothetical or just fantasy or imagination when you see this core product, which is so important for Google, their trajectory, growing at this rate of acceleration. So is this not good enough, Tevis?
Well, I don't know, man. Like you're asking me or you're asking the market, right? Because to have a company the size of Google grow 81% is staggering. It's mind-boggling. It's unbelievable. But the market isn't buying it. I mean, Google is what, like 25% off of their highs, something like that. Apple, by contrast, who you say is punting on AI, is at all-time highs, Roy. Okay?
Yeah.
Apple is trading at all-time highs by doing absolutely nothing on AI. Meanwhile, Google is spending and increasing their spending, and they're increasing their growth rate, but people are selling it off. So I don't know what, again, we are in this sort of like super weird market right now. And ultimately, I just think we need more time to have it play out, right? So
Yeah.
it's a popularity contest at this point.
Yeah, and there's challenges that Google has to navigate over the next year as well. But I like, out of all the hyperscalers, honestly, I don't think that any of them are going to have difficulty monetizing and seeing that ROI for AI. But even there, like, even if I was concerned with all the others, I think Google is just so well positioned to capture that value. Like, I don't see a scenario unless, Larry Page and Sergey Brin were like trying to tank and sit with Sundar, let's just destroy our company, which is not realistic. That they can fail to capture that value here. I can see scenarios with all the other names where, like, yeah, maybe Zuck, gets a little too excited and overspends, and they hire a bunch of talented people, but they don't really form a team. I don't think that's the case with Meta. I don't think that's the case with Microsoft. But am I missing something? Like, why is the market so concerned with Google here?
If you're missing it, I'm missing it too, brother.
And it's, people could say, "Oh, you're just biased," right? Like, I'm a bystander. Like, I don't really have a vested interest on whether Google does well or not. Like, I don't even own it in the draft. So,
hey,
yeah.
What I will say is, do you remember how back in 2020, 2023, whenever it was, we had Matt on the channel because Google had sold off from $250 down to 180 or 190, right? This was in, not even 2022, 2025, right? Last year. Feels like 2022. But the point is like Google, is going down. Google is not innovating. Google is not doing anything. And we did have it again in 2022 when it fell all the way down to $120 because they rolled out Bard and it like came out with like Black George Washington or whatever. And we're like, this is shit. This is not AI. And
it was terrible.
It was terrible, right? And meanwhile, 2 years later, 3 years later, Google hit all-time highs. And they pulled back and they hit all-time highs again a couple of months after that. And they pulled back and they hit all-time highs again. This pullback is no different from that, man. Like if I look at Google here, at 319, yeah, it's a pullback, but I would be shocked, Roy, if in 2 months or 3 months or 4 months from now, or by the end of the year, let's call it, we don't touch all-time highs again, because that's what these companies do. They keep delivering, they keep executing. Meta just rolled out new products today. They won their lawsuit. They're talking about excess AI capacity. They're doing all of these initiatives. And it's like, dude, this is a $1 trillion company. Google is a multi-trillion-dollar company, and they're still executing with such speed and such vigor that it's really fascinating to see just as a bystander. Am I concerned about Google? Dude, if I put my entire net worth into Google and then just took a 10-year vacation, I would be confident that that money is not only still around, it's compounded like heck. I don't care what happens in the short term over the next couple of months, because the market is just being irrational right now. They're being emotional and they're selling off. And quite frankly, I think a lot of these people with the options volatility compounded on top are going to get hurt as a result of it, because these companies just keep steamrolling through their competition. And it's a built-in feature of capitalism that this is going to continue, because that capital that they're spending is going to yield them more, ROI. It's going to yield them more money. And they're even going to grow their lead because the resource pool that they have. So am I concerned about Google? Absolutely not.
Can you throw up Martin's comment at 701? Isn't it just a buying opportunity? Of all the companies out there, Google is one of the least of my worries personally. So
buy it.
For me, anyway, it's not a buying opportunity. I think that there's other opportunities that are going to outperform Google, but I do agree with the second part of it. Like if you're looking at like 10 years out, it's just hard to look at Google, the way they've been executing, the way they've been building, the strategy that they've been using, the market share, and how they're navigating the shift from the ad-centric model of the web to AI and using Google or using Gemini. Like there's just so many levers that they're playing right now. So I do agree with you. Like if you're looking at Mag 7 names, it's one that it's hard to drop a bear case. It's like, oh man, it's going to be in a really bad place in a decade. So
exactly.
It's interesting. Yeah.
Dude, and again, I come back to this idea of piggy bank stocks, right? I come back to this idea of these are safe havens for my money. And it might not be a safe haven in the next 3 months or in the next 6 months, but in the next 6 years, it's absolutely going to be a safe haven for my money. The reason is because I wouldn't say that they're too big to fail, but they're focused on the right things. Apple, on the other hand, I know that they're at all-time highs, but that's the only one where I'd be like uncomfortable, let's call it, to put my money on, because they might be the darling of the market today, but they're going to be smoked 6 years from now when Amazon is seeing ROI from their CapEx, when Meta is doing the same, when Google is doing the same. Everybody who is investing today is going to have the returns from those investments 5 years, 6, 10 years from now. And Apple, who's doing nothing today, is beloved by the market because they have no CapEx. Their free cash flow looks beautiful. But guess what? That's not growth. That's not taking risks. That's not innovation. And I would much rather invest in these companies that are getting beat down today, because I know that they have a proven track record of executing consistently, and they're going to compound my money better if I look on a multi-year view. The market is choosing to look on a multi-week view. Who cares? Who cares?
Yeah, like when the market does that, oftentimes you'll see this flight to safety, and Apple historically has been that. I think it's at this point a little bit misguided, especially at the premium you're paying for Apple, but it's not too surprising to see Apple up in such an environment. So any other things you want to hit, Tevis, before we have like 40, what have you been doing? 40 questions. and keep asking them. This is, of course, our favorite part is a Q&A. So
yeah, exactly. I want to invest in Google. Why don't you do it then? Do it. You know why you don't do it? You know why? I'll tell you very simply why you're not buying Google, even though in your brain it's the easiest bet in the market to make. You know why you're not doing it? Same thing I told you earlier is because you're entirely entranced by these AI companies that are growing triple digits year over year, and you as well want to take advantage of that. Why is everybody around me getting rich? I should also be getting rich. Why am I satisfied with 5% or 10% or 15% growth? I deserve 150% growth. You know what happens? You're going to get smoked if you do that. So you can do it, but be careful and know what you're doing and know what you're signing up for. If not, buy Google and chill, man. Just buy Google and chill.
Well,
Not
I
financial
would
advice.
say it's not cheap here either, and there are a lot of names out there which are high quality companies that are trading cheaply. So, uh,
All
but
right,
yeah,
let's answer some of these questions. Okay, so this is actually an illusion because after I remove all of these donations, then we're going to see the real question count. So let me just do that now. And thanks everybody once more for all the generosity, and we really appreciate you. This is, our favorite show of the week. Um, whether it's a good week or a bad week, um, yeah. Understand the rule of 72, Highland says. Absolutely. It's how long does it take for your money to double? All right. Yeah, new and upcoming motivational speaking. Also, I'm like starting to clip more and more shorts. Let me know if you guys are enjoying them or not. I'm mostly posting them on. I am posting them on YouTube, but I'm mostly posting them on TikTok and on Instagram. So if you want shorts, that's where they are. Let's get started. Roy, you ready?
all I heard was you're shorting something. So, you shorting Google, man? What are you doing? No, I'm just kidding. Yeah,
Yeah,
let's go.
I'm trying to um, try some new stuff without really. Um, anyways, let's see. Happy says, can you genuinely go 48 hours without checking the market or thinking about your portfolio? If not, how do you stop investing from taking over your life? Great question. And it's ironic because this question normally wouldn't have been asked on a green day, I think, but it is asked on a red day. So, Roy, what do you think?
Yeah, I mean, like, yes, you need to learn what for your mental health works best for you. So I would say there's times when it doesn't work best just to like completely ignore everything. But if you've already made your moves, if you already have your positions there, there's nothing else to do. You're just kind of waiting. Like that's where I'm at with my portfolio. I like where I'm allocated. Is very painful today. There's no reason for me to constantly check it. And over the weekend, I will check things if I'm making content related to that, but usually over the weekend, unless there's something where I'm like, hey, there's something I need to study up on over the weekend. Usually that's a time for me just to have a break from the market. At least 24 hours, if not 48. Throughout the week, usually there are days where I don't check very often, but I do check pretty often just because I'm a content creator. If I wasn't, I'd probably check. I'd still check, but there would be times where I'm like, hey, I've done all my moves. I've done everything I'm going to do. There's no reason to look. So,
Yeah, I mean, look, I have a dream that one day I won't check the market as often as I do. But until that day comes, then, I think if I didn't have content similar to Roy, I would be checking it maybe once or twice a week normally. With content, it's much more frequent because I need to be on top of the news for these shows to make videos. I think options is also something that compounds it
yeah,
because
that's
if
very
I'm
true.
doing options trades, like I will, like, so for example, Nebius was at 230 on Tuesday, and I wrote $300 cash secured puts, and then I closed them off, and they were like 70 or 80% profit in 2 days. If I just went on vacation for a week and didn't check, I wouldn't have been able to take advantage of that opportunity because, you know, on Monday they might be at 230 again, and I've lost that opportunity. So checking the market is something that's lucrative on days when my broker decides to work, but it does also affect your mental health. But look, man, I think the way that I see it is like this is the most fun game that exists in the world. and it's the most stimulating game because you're playing against the entire world and you're playing with the entire world. The amount of alpha that you can get from other people on X, you've democratized entirely information gathering, and that I think is really exciting and really captivating for me personally. So this is not a chore for me. I think once you can learn to emotionally disconnect, then that's the core of your question, I think, right? And how do you do that? Well, I talked about a couple of live streams ago, um, where I'm trying to get into that mentality where I tax myself, and then with that tax myself from my gains. If I make a successful trade, for example, on Nebius or on Air or on Robinhood or whatever, I want to tax my gains and just buy the index so that a year, 2 years, 5 years from now, the majority of my portfolio value is in the S&P or in the QQQ or something, and I don't need to check anymore. And in that case, I probably will still check because of the content, but as a normal, non-content creator, you don't need to, right? And
Right.
I think that's just like one tactic, right? Like overall, it's learning how to disconnect and how to be present and how to touch grass and not be emotional about the market, but it's very difficult for people, right? Anyways, great question. Let me answer the donation questions because I forgot to do that first. Shoot. Highland, you donated and you had a question, but I accidentally erased that with the other gifted. Oh, no, never mind. That is here. So Highland asks, real question and breakdown on ARM. Donated $5. Thank you very much, Highland. Highland says, should we be in ARM? Yeah, I mean, Roy, do you have thoughts on this? I can also share some.
So I've not kept up with ARM closely over the last year. So let me just see. This is a donation question, and then we'll hit Kryptonites here in just a second. I don't even know where they're at in terms of share price. So man, yeah, they're up, and I was figuring that they would be just because everything related to the supply chain is going to do very, very well. And yeah, year to date they are up 126%. Price to earnings is rich, but I mean a lot of that does depend on how meaningful this acceleration is for their revenue and also their earnings. And I don't know them well enough to say. So I do know that they're a very good company, but yeah. Do you have any thoughts?
Yeah, look, I mean, it's kind of interesting because like they're licensing their chip architecture and they're collecting royalties on that. They have over 95% gross margins and they have recurring revenue. I mean, I'm sure you can pull it up, but their data center royalties more than doubled in this year in 2026. And 50% of that, from what I read, is from the top hyperscalers out there, like the Googles, the Nvidias of the world. They're obviously reporting earnings coming up very soon. So, I mean, it's going to be really interesting to see, right? Because they're a big player in the space. I think there was some concerns from what I was reading around like China exposure. I think there was one. The capex slowdown risk obviously is something that affects everybody. But overall, one thing that I'm going to be looking at for ARM, and I don't follow them, I don't have a position, is are they raising their royalties for the chip? Because they have like their V9 chip, which is coming out at some point here shortly. I could be misquoting some of this stuff, right? Because I don't follow ARM too closely. But if they have more revenue per unit from a royalties perspective without the volume growth as they roll out their V9s, that could be something that's bullish for the company, obviously, and could confirm the macro growth story. Overarchingly, as they report earnings next week, it's going to be interesting to see what their commentary is around the macro demand out there. Hope that helped, Island, but yeah.
Yeah, the other thing that I had to look just to double check is the RTX chips. So NVIDIA is making this pivot into CPUs, and the architecture that they're using is ARM architecture itself, and that's a very good thing for ARM. I remember we did see a nice spike in the share price for ARM as well, and so depending on how that goes, like that could be very, very bullish for them. But yeah, I just don't know well enough. Good question.
Yeah. Let's jump over to Kryptonite's question. Thank you, Kryptonite, for the $10. Reminder, Tevis, Microsoft was never not growing. but it still took roughly 15 years to recover from its dot-com peak. Microsoft was growing that entire time. It wasn't a failed company like Cisco was.
Yeah, I think that at least for the hyperscalers, outside of Tesla, which its valuation is pretty stretched, but I mean that's Elon premium there. All these other plays like Google, Microsoft today, Amazon. If you look at them by like free cash flow, I think that's the wrong measure when they're doing this heavy capex. But if you look at their price to earnings, forward price earnings projections, PEG ratios, it's not where the bubble is. Like if there's a bubble, it's private equity. It's maybe some like Silicon Photonics names or certain smaller segments. I don't think it's the same thing as a .com thing. I know that's not fully what you're saying. Is like Kryptonite said, like sometimes it does take a while for these good companies that are growing to grow into their valuation. And could we see that environment with some of these hyperscalers and some of the other names we're talking about? Yes, but I don't think it's going to be a 15-year thing.
Yeah, and like I think if you DCA, you'll be fine. If you bought Microsoft and it crashed after the dot-com peak, let's just assume we're buying a massive bubble right now, right? And you kept buying Microsoft, you would drastically reduce your cost basis. And in reality, like let's say you DCA'd every month, you would probably be at break even like within 3 years and not 15 years. Let's just say, right? So I think that's a factor too.
For sure. All right.
Let's go into. Let's see what Martin says. I enjoy watching the port. I enjoy trading, but almost half my portfolio is Google. So on most days, besides today, it does fine. No huge swings. Yeah, man.
Yeah.
I mean, if you look at, it's funny because like people say, oh yeah, S&P, blah blah blah. Like S&P is up 8% after today's drawdown. QQQ is up 11% after today's drawdown. But it feels like everybody is balling out of how much money they're making because X is an echo chamber in AI, and everybody is talking about like photonics, like this is the next, NVIDIA, this is whatever, this is AI is going to kill SaaS. It's like, guys, if you look at the broader market, go look at healthcare, go look at, consumer staples, go look at consumer discretionary, all of these stuff. The market's not up by a crazy amount. It's up 8%.
Yep.
Let's continue here. Yeah, X is the momentum bus.
Hey, Jensen's on X, so that's a big deal.
What's X? X is Twitter. Jensen is on it now, yeah. Which is kind of crazy, man, because like not only did Jensen I mean, we didn't talk about that, but maybe we save it for a bootleg on Monday. But not only did Jensen post, but Zuck posted, Elon posted, I think Satya Nadella posted, and did Sundar post. But like all of the CEOs, it was like a coordinated effort. If they weren't CEOs, I would have thought they were politicians, the way that they were copying each other's posts.
Right before midterms, yeah.
Right before midterms, yeah, exactly.
And earnings are a bit like that too. I don't think that they're feeling the heat as far as like losing their jobs or anything, but they do definitely want to set the tone. Jensen has done it, very well externally outside of X, but yeah, I'm actually a little bit surprised. I didn't realize that he wasn't on there at all. I just figured he's one of these CEOs that posts like once or twice a year, and like, oh man, this is his first.
Jensen hit the Twitter sphere, and it was his first tweet or whatever, like the open letter. And I clicked follow on Jensen's profile when he was about 15,000 subs, something like that, like in the morning. Let's take a look at where he is right now.
I think he's already monetized.
527,000 subs in a day. 500,000 people in a day.
Yeah, he's monetized. That's why he did it, really, was to get the $200 ad revenue or whatever.
Yeah.
Buy one share of NVIDIA on the dip.
Yeah. My future CEO in an alternate timeline, not posting.
Yeah.
This is why he's not my CEO in this timeline. What's X? What's Twitter? Twitter is a supposed alt-right social media application where all the CEOs and all the news breaks. Miskelak says, my portfolio sorted by size is Meta, Google, Amazon, Microsoft, NVIDIA, Reddit, Palantir, Serve. Fiserv? What's Serve?
Mm-hmm. That's not Fiserv. I'm not sure.
Serve Robotics. Oh,
Okay.
spicy. What do you guys think about it? I love like 60% of it, 70%, 80% of it.
Yeah, I mean, I think it's hard to go wrong with the hyperscalers there. I love Palantir, obviously. Reddit, I think, is positioned well. I wouldn't want to earn it, and Serve, I don't know at all, so can't answer on that one. So I think it's solid. It's yeah, and like I think the best thing about it, probably for you, is it likely allows you to sleep at night. With
Yes.
Meta, Google, Amazon, Microsoft, Nvidia being the core, Palantir as well, like. And probably Reddit. Like you can look at and say, well, there might be a lot of volatility, but like 5 years out, are you afraid that any of those companies are really going to falter and not do well? Probably not.
Yeah, but I like the mix there because you have like the main hyperscalers, but you also have outsized bets with Reddit and Palantir and Serve Robotics. Like they're smaller companies, relatively speaking, and they could be outsized bets. I know you're smiling.
Palantir is pretty big,
Palantir,
but
yeah, I get
yeah,
it. I get it.
yeah. But
Um,
I get you. Yeah,
yeah, what's Serve Robotics at? Let me take a look real quick. Serve Robotics is 372 million.
microcap.
That's wild.
Yeah,
Um, what was I going to say on this? Oh yeah, I tweeted today, or I X'd today, Roy. CoreWeave and Rocket Lab have the exact same market cap. How does that make you feel?
that's. Oh man. Yeah, CoreWeave. I mean, it doesn't deserve being treated this way. Rocket Lab, like it's one we have to keep on the radar just because it's a really good company. It's expensive, but it's no longer like nosebleed expensive the way it was. Was 150. So
Let's talk for a second. Which would you rather buy at? Let's assume you owned neither. Okay, you don't own either of them. They have the exact same market cap, $39 billion. What do you buy, CoreWeave or Rocket Lab? Two
CoreWeave,
different sectors altogether, very different businesses. They don't overlap at all, other than retail sentiment favorites.
CoreWeave, easily. Yeah,
Easily, CoreWeave. Is that just
yeah.
because the NeoCloud, both thesis and AI, is stronger in your mind versus the space thesis, or
Yeah, I mean, like Rocket Lab, it's a great company, but if you look at like the way that their revenue is going to be, also with they have high capex as well, and they have a nice moat, but the way that revenue accelerates is a lot less exciting than CoreWeave's. CoreWeave, like the only concern is if you don't understand basic math and you don't understand take or pay contracts, you're just focused on the debt, and that's what the market's focused on right now. But I mean, there's also debt with Rocket Lab. Like that's the reality of these massive plays. So that's the same as far as the downside. Rocket Lab trades at an extreme premium. CoreWeave, it would be hard to see over the next couple of years CoreWeave not be meaningfully higher than where it's at today. And yet I can see a scenario over the next couple of years at Rocket Lab, it's not higher. Over 2 years. Like 10 years, if we're looking at 10 years, maybe a different story, but yeah.
yeah, I think the counter would be, and by the way, I would buy CoreWeave as well over Rocket Lab at the exact same valuation. So don't get me wrong, I'm on Team CoreWeave here. The counter would be that Rocket Lab is at $40 billion, a generational company if you hold 5 to 10 years. And there might be an inflection point where if CoreWeave outperforms from now and 5 years from now, Rocket Lab is going to outperform 5 to 10 years from now, and in a big way. What do
Yeah,
you think about that?
I think there's higher reward long term potentially with Rocket Lab, but there's also a lot higher risk. And I think at least for me, I can't just look at reward and ignore risk because then I'd just be in microcaps, and that would blow up my portfolio.
Got it. Okay, guys, we're going to do a little bit of a longer stream, I think, today, Roy. I don't know. I'm speaking for you, but we got a lot of donations, and I feel obliged to the people. What do you think, Roy?
Yeah, let's answer these questions.
Yeah, I was going to say, because we have 46 questions.
But
So
we'll cut off the questions here.
okay, let's cut off the questions here.
barring donations. But you guys
Barring
don't need to do
donations.
that. Save them for next time.
Um, all right. What are we doing on Wednesday? Trade the opening pump and sell before the Fed dump?
I mean, so we have in the morning SoFi reporting
Which we'll
in the
talk about.
morning, and then the Fed meetings, and then Robinhood. So that's my Wednesday. It's one of those, if you're like, hey, can you spend 48 hours without looking at the market, including Wednesday? The answer is no.
Oh,
We'll be
Robinhood
doing those earning
too.
calls live. Yeah.
Jeez, man.
Yeah. And Robinhood, like, we know more of the numbers than ever before because they did those senior convertible notes just to take advantage of some opportunity there. So.
I was able to close my Robinhood covered calls today because I had them for 115 for next week. I didn't even know it was Robinhood earnings next week. So I'm very glad.
Yeah. Yeah, I don't know how like the market will react to the earnings. They should be very, very good. But Fed minutes, that's going to probably determine more than anything. It's kind of a shame. I mean, it's not really. It's got to fall sometime, but I never really like it when there's some big macro thing that takes the focus off the company's earnings.
Who was it? Duck told me to do this little Gen Z heart. You know, this is a heart in Gen Z slang.
I didn't know that. No.
It's like a heart.
I know, like the Taylor Swift one, or
yeah. That's what I usually do. We can know your generation from what kind of heart you do. So, yeah. Dude, this show is so unserious. I freaking love it. Okay, let's continue here with our gazillion questions. Are we buying the dip? Yes. What do you want?
I'm out of money, so I've already bought at higher levels for the most part, and yeah.
What are these gang signs? That's the Unk heart. Yeah, look, so I want to buy some service now, and honestly, I think that's like pretty it. I'm very happy with my positioning. I'm going to be selling some VG over the next couple of weeks. I mean, less so selling and more so getting my covered calls called away. Yeah, I would say that's it for me. More service now. Will USD keep getting stronger? I'm from New Zealand and our currency is in the gutter. Yeah, welcome to the club, my friend.
Yeah, I mean, like, I think that Trump actually wants to weaken it or keep it relatively weak. So we'll see whether or not that plays out. But if you have industries that need to export, they usually benefit from a weaker currency. I know it's kind of counterintuitive. So it's a good time to travel to Japan right now too. I was looking at the.
Let's do it.
Yeah,
dude.
I thought about it a couple of years ago, and I'm like, well, it's not the right time as far as family and different things, but yeah, sushi.
Let's do it, dude.
Beautiful area culture.
When I went to Japan, I was just like, I'm gonna have an insane amount of sushi, and you know what? I found myself having way more ramen than I had sushi because ramen is like their fast food, and it's like that. Like they never sleep over there. I would just go and have ramen at like 3 a.m. because I couldn't sleep because of the time difference. It was just amazing.
Yeah.
Thanks for going through chat. Yes. Japan meetup. I'm so down. Express is from New Zealand. He is going to pop by Japan. Dude, we should do a Japan bootleg, meetup. That'd be fun.
That would be so fun. Yeah.
What percentage of your portfolios are in Neo clouds? Thoughts on Oracle? Thank you for the 7. Is that Dubai currency?
I'm looking it up. That's United Arab Emirates. Dirham.
Yes, dirham. Thank you for the 7.29 dirham.
Thank you. So CoreWeave has fallen and pulled back, and some of my CoreWeave position are leaps. So it's probably like, I would say 8% or 9% on CoreWeave, and that's the only one that I own. I like Oracle. I like the Neo Clouds more, so I haven't invested in Oracle. But I did take an Oracle in the 4th round, which is a pretty high draft pick. Like, realistically, like, some of it was gamemanship. It felt like a 5th round pick, though. I think it's a good opportunity. The market has similar misgivings and misperceptions as CoreWeave, so I I know it's been crushed and it's been beaten down, um, but I think it's a good opportunity. I do prefer CoreWeave though.
Yeah, I have 25% in Nebius. I'm just looking up right now. And then my core weave position is in Leap, so it doesn't account for here. But I would say I have about, I don't even know, like 7%, 6% in core weave leaps. And then I have a ton of cash secret puts. So I mean, like, look, man, I think between Nebius and CoreWeave, it's a little bit. I would say maybe like 30% of the portfolio between just those two.
Yeah, actually, I think I wasn't including my leaps. So it'd be actually closer to 17 or 18% right
There you
now
go.
because it's
That's
all my swing is core weave. And
crazy.
yeah, I have to figure out like if this keeps just falling relentlessly in and probably through earnings, like what do I want to sell to add more?
Yeah. Oh, Chef Investor LLC said, I would go. I could make sushi for you guys, bro.
Nice.
Honestly, we got to do something, Roy. We need a bootleg meetup.
Yeah.
Fiesta Friday / bootleg meetup. It would be fun. Average price on Nebius, $81.18. How many positions do you hold in your brokerage account?
10.
10 for Roy. Let me just go with the equities because I also hold like leaps and covered calls and all this stuff. But just stocks, I hold 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10. So yeah, didn't plan for it, but same shirt, same number of holdings.
That's right.
Just same age. Do you expect SoFi to factor for rate hikes into guidance? Great question. Last earnings, we went from expecting cuts to nothing and then sold off. Okay, so this is a good question here. And the reason why this is a good question is because last quarter, they did not raise their guidance. Okay, they kept their guidance. Now, keeping their guidance with two rate cut expectations versus zero rate cut expectations is drastically different. Now the market is expecting 1 to 2 rate hikes. So the question is, are they going to keep that same guidance or are they actually going to lower the guidance? If they lower the guidance for the first time ever, they're going to get crushed. My bet is that they're going to keep guidance the same, but it's a real conversation around whether they increase their guidance even further or whether they keep their guidance. And I think they're going to keep it. And I think the stock might get crushed after keeping guidance because that's what happened last quarter as well.
Yeah, I think tomorrow might be when I do my earnings preview video. Otherwise, it'll be Monday. But looking at earnings, I still have a few more things to do. That was the big negative factor that might be a downside surprise is just that they don't raise guidance, which it wouldn't be as much as a surprise, like you said, as last time because they had the history of like every single time beat and raise, and they didn't. I think what you said is accurate, that they're probably going to just say, hey, we're just keeping guidance as it is. A lot of their growth, if you look at it in the prior quarter and the quarter previously as well, was because of lending. And when you're looking at an environment where there's raising as far as these Fed fund rate, that's not really where you want to be super aggressive in lending. It's not, I will say, like with these hikes, I think the banks and SoFi, yes, it is a bank. It's more than a bank as well, but they do so much lending, which is, I don't know if this question is in the queue, but I saw somebody asking why the banks are up and doing well and SoFi is not. There's a lot of reasons for that, but part of it is if you look at just the sheer amount of lending that they do, and then the type of lending as well, that the personal loans are not as they're perceived as a little bit more dangerous because they're not backed by some real collateral like a house or something like that, so the market tends to discount those as well. And if you're holding those loans on balance sheet in a time when you have cuts, all of a sudden you benefit because of the tangible book value, and it's the other direction in the face of hikes. So I wouldn't be bearish SoFi, but it is something to for sure keep on the radar, and that I think is going to be the most important thing is how SoFi navigates not only the numbers that they put out, but how they talk about guidance and going forward in the different scenarios. Now, the hardest thing and the worst thing, like it's really kind of unfair for when SoFi does earnings, is they're doing earnings literally right before the Fed fund meeting. So they just have to guess and do the best they can. And SoFi and most banks tend to be very conservative. So I think they have no choice but to say, hey, we're just not going to raise guidance. Now, if they do raise guidance, Tevis, is that just we're off and to the right, or not necessarily?
If they do raise guidance, it's extremely bullish. And the reason is because SoFi is historically conservative with their guidance and they're entering an uncertain rate environment. I think if I had to place odds on them raising guidance, it would be incredibly low for them to do that. Especially because, as you called out, the Fed FOMC meeting is literally a few hours after their earnings call. So if they had FOMC and Warsh kept rates stable, and then SoFi reported earnings, I would say, yeah, maybe they can raise. But before that, I think it'd just be reckless for them to raise unless they have like an ace of spades up there, in their hand or something. Like they have something that's so good that it doesn't even matter what the rates are going to be. But because they guide so conservatively, if they actually did raise, it would be insanely bullish going into the rate environment blind.
Yes. Yeah. Yeah, I think it's less than 10% chance that they raise.
Mm-hmm. Listen to Mr. Shivers now. I put up a bootleg meatly. I can't talk. Bootleg meetup poll, and I said the options for locations were Houston, Toronto, Japan/Asia, or Europe. I'll let you know how the poll ends up, but if it's Europe, is it going to be Greece? I don't know. But if it's Asia, it might be Japan, maybe Australia. That could be fun.
Yeah,
but
Greece would be fun.
We'll figure it out. Yeah, I don't know if I want to. Like Greece is maybe like after the meetup, we just go have
baklava,
like a siesta. Yeah, baklava. Ooh, yeah, feta and olives and lots of wine.
Euros. Oh.
Did you see Jeremy's breakdown of ServiceNow's report? He gave it a D, and he was quite bullish previously and fully invested. No, I didn't see it. I'll have to check it out. I'm kind of curious as to why he would give it a D. Please vote for Houston. Yeah. I'll be visiting Roy in Houston at some point shortly here. But maybe we could do Houston, actually. When is the MIT meetup for Houston? Do you know, Roy?
That was canceled for Texas, and it's not happening. So,
dude, should we actually like look at a venue and do a Houston meetup?
It might be worth doing. I don't know that I can this year, but we could like early next year. So yeah, we'll have to think about that.
All right, let's think about that. That could be really fun, actually.
That would be fun.
No one wants Toronto. Yeah, welcome to the club.
That's true.
It's literally like I think one person voted Toronto out of like 20. It wasn't me. Which act passes first, the SAVE or the Clarity Act? Follow up, Roy. Do you agree with the SAVE Act?
Well, I guess I can let you go first, and I'll give my thoughts. So,
I don't think Clarity is passing this year. I don't know much about the SAVE Act, but I don't think Clarity is passing this year.
Yeah, I know the SAVE Act keeps getting like tweaked and changed, and then there's like always pork that's put in there. So, I've not really given enough thought on the SAVE Act. I know there's some. I would need to look into it again just to see what the current. But probably the SAVE Act, because I agree with you. If they didn't get it done this week, Clarity's not passing this year. So, it could be that neither passes because Congress is now in recess, I believe.
Yeah, John Cutler, DM me, and then if you can get us a hookup, then I'll definitely reach out. But I'm not doing Tehran, thank you, but I think that airspace is locked down, unfortunately. Although I would imagine there's no party like a Tehran party right now. If there's anything to have people just turn their brain off and go, forget about that would. But alas, Houston is the winner. Japan, Asia is actually the winner, but Houston is a close third.
Japan would be very cool too. So
yeah, man, like, yeah.
I do seriously want to go there. Like between like natural beauty and culture and history, like and then the food, man, yeah.
Yeah, I mean, like, I was there for a month, man. It was fantastic, and I still feel like I didn't see enough or do enough. It was actually pretty cheap, Roy, and it's gonna be cheaper this time around. But yeah, we definitely got to go to Japan.
Hmm.
Straight up Moose Booze cruise. I love that. That's so fucked up. All right, let's continue here. What do you guys think about the Mag 5 stocks? Are CapEx spenders in NVIDIA worth it? Yes.
Yeah. Yeah, I'm assuming no Apple, no Tesla, but yeah, the others, I mean,
What's
pick
the
one.
price target for CoreWeave? Let's just say 12 months. 150.
I mean, that sounds reasonable. I do think, like further out, it's meaningfully higher as well. But yes,
Are we buying the CoreWeave dip or more service now?
neither because I already bought the 40 dip, but yeah, if I had more money, as I have more money coming in, I actually sold my SpaceX shares because I was like, I need more CoreWeave. So it's getting to that point, scraping the bottom of the barrel. But yeah, CoreWeave is just, I don't know when that'll rebound necessarily. Service now I think is good, but man, like the valuation is just ridiculous on CoreWeave right now.
Yeah. Um, honestly, I'm a buyer of both here. So
I
you're
think it's
asking the
fair.
wrong person. Does Roy's mic turn green when it's a green market day? No, I think it's always red. It just turns less red.
Yeah.
Is Tevis's Nebius position okay? My Nebius
He's
position
up.
has seen worse days, that's for sure. I was
He's up.
dude, do you remember the days when I was going $25 in the money with cash secured puts when Nebius was like 75? I was like, fuck it, 115s.
Yeah.
We're not there yet. We're not at those levels yet, thankfully. But given Google's results and the market reaction, knowing Meta, Amazon, Microsoft CapEx will most likely be the same, are we looking at any short-term play on the downside or earnings play? I'll be right back.
Yeah, I mean, not really like looking for anything like this. We saw, and the reason why is on Thursday, going back again to that graphic that I put up that Evan had put out there. I think it was from Bank of America. That was the largest pull down of any day since Liberation Day, and I think we landed actually and set new records if I'm not mistaken. And so it feels like what you said. A lot of that is priced in as far as the market knows that these companies are going to expand capex. It knows it's not going to be super excited about it. It knows it might get some equity raise remarks as well. And there's stuff that we could talk about on that too. But so like the question is really like how much is priced in, and barring some like just shocking statements or some colossal miss or margins collapsing or something, I would be surprised if we see a worse reaction than what we saw out of Tesla, certainly, but also Google that day. So, but I'm not looking to play it short term.
Yeah, I'm not playing it short term. Hyperscalers for me are a buy and hold. I know like Meta might completely drop off the back of Google's commentary. I'm still holding Meta. I'm not really doing anything. I closed my covered calls on Meta after they I opened them when it was like at 650, and I posted publicly about them. I closed them now. Dude, it's so easy to make money selling options in this type of market because the volatility just jacks up the premiums for these things, and it's such a kangaroo market, up and down, up and down, up and down. That I need to buy TJ a nice dinner when I see him because
Yeah,
that man has done a lot.
it's one of the merits of the Houston meetup.
Yes, dude.
And Matt.
Yes,
And a lot of other cool investors here too. So yeah. And you'll get we can cater it with like fajitas or something like that, so or
dude,
barbecue.
I am gonna be wearing the biggest freaking cowboy hat you've ever seen.
I'll wear my boots.
Like those big like the 50-gallon cowboy hats in the Houston meetup is gonna be amazing. Yeah.
Yeah, I have some awesome cowboy boots. I'll have to show you guys.
What's the price target for CoreWeave before?
I think you're saying earnings. That was his question. Earnings is we don't know the date yet. They haven't announced it unless I missed it today. But it's probably a month from now. I would guess like a lot depends on macro. It depends on like Fed and whether or not they raise or they stay the same. We'll get a couple more inflation reads before then too, and of course all the hyperscalers will talk about this build out. But looking at RSI and looking at just how relentless this drawdown has been, I would be surprised if we're lower entering earnings than we are today. And again, like a number of, most importantly, the annual run rate is and the bookings as well. I think are going to really surprise people with CoreWeave. So should be a good read. Does it have to rebound and go up to like $100 before then? I wouldn't guess that either. But I do think that we'll probably be in the 80s.
Uh, yeah, yeah. Well, I could see us being higher. Honestly, we have a little run up into earnings. If it's 2 weeks from now, I could see it.
Yeah,
but not if we get killed by the hyperscalers reporting next week. So
that Iran, the Fed minutes, like there's so much that CoreWeave has really nothing to do with. It does impact them, but
yeah. For Travis, how would you manage a high beta, high momentum position that you can write covered calls on? Let's assume you're down 25% on shares alone. Okay. Do I want to hold this thing in the long term?
I have back? I'm gonna get another drink.
Yep. So question one, do I want to hold it in the long term? If not, I would write covered calls at my cost basis. At whatever point I'm getting somewhat of a net credit for that. If yes, then do I have cash available? If I have cash available, then I'm going to write cash secured puts so that I can actually hopefully get back into that position or lower my cost basis into that position. And then I'm going to be writing covered calls to get out of those shares. You could also like write cash secured puts at the money. Like, so for example, for Amazon right now, I just want to get into Amazon shares and I wrote them for $230 for I think a month from now, knowing we have Amazon earnings and knowing that this thing could get crushed on earnings. I don't care. I want to be in Amazon. And if you're going to pay me $9.50 per contract, thank you. Like I'll happily, buy more Amazon at $220 cost basis. So
yeah.
Anyways, I think like it really depends on what you want to do with the underlying position. But yeah, Tom says if you're only down 25%, it's not BMNR.
Yeah, make sure you want to own it if you're writing puts.
Yes, exactly. Did I buy more service now? Not yet, but it's on the horizon. Thoughts on LeBron to Philly? Yeah, I saw this.
Yeah, for a very small contract too. I was kind of hoping he'd actually go to the Heat, but yeah, it is what it is. So,
I mean, I know people were hyping this up, like, oh my God, Philly's going to be the best team, blah, blah, blah. Like, dude, this is like MJ at the Magic type of thing. Like a lot of people are going to hate on me for this, but LeBron is going to the Philly to like end his career kind of thing. He's not going there to win another ring. So I think it's good for Philly. I think that obviously LeBron is still LeBron, but you're getting the last little, juice that he has left. And this is probably going to be like his last season, honestly.
I'm guessing. I know that Philly fans for the NFL and for baseball are just like insane. So I'm assuming basketball is the same thing. So I'm kind of surprised that he would go there, just knowing that. I mean, they'll be over the moon at one moment, and then the next moment want to lynch him. So
yeah, exactly. MJ to the Wizards situation. This is exactly it. This is like Ronaldo to the Saudi Arabia League.
I mean, for the contract size, I don't think it's bad. Like like if he doesn't, I wouldn't expect anything from him on defense. But yeah, he'll be able to do some things on offense. That'll be interesting.
Would you rather Nebius or Iron at these prices?
Nebius.
Yeah.
It's not, well, I shouldn't say it that quickly, though. Iron is pretty attractive at this price. Yeah. It's CoreWeave for me, but you didn't put that. But I would say Nebius just because I know it a little better than Iron. I know Iron pretty well, and I like the leadership a lot.
Yeah. Yeah, I would say Nebius as well.
But man, Iron is appealing here.
Is SoFi in the S&P 500? Not yet, but keep holding your breath. Who knows? Brian says, with backlogs that huge, how can either make a new deal? That's a good question.
Because they have a lot of supply coming on, and they have. I don't remember. I don't know actually if you know how far out they sell their supply before they have it coming in the market with Nebius. I know it's. I think it's within the next couple of years, but for CoreWeave, they have more supply coming on in the next 2 years than they've sold by a decent bit. Plus, even though they do have a high utilization rate, there's usually not they're not getting out necessarily the I mean they're not getting 100%. Nobody is. At the same time, like there's a lot of additional efficiencies, and so there might be some scenarios where you see some of the people that have overcommitted as far as those take or pay contracts, and they have to pay no matter what. But like the biggest thing is there's a lot more data centers being built out. The Vineland campus is that I think that one's fully spoken for as far as the volume, if I'm not mistaken, for Nebius. But yeah, CoreWeave has a ridiculous amount, as does Nebius coming online. So beyond that, like how far out they go is with these cells. You know, for CoreWeave, I don't think that they go much out beyond like the 2 years.
Yeah. The TLDR is they sell for future. They sell in the future. So yeah. Whenever Roy is asked like Iron or CoreWeave, he's like Arcadi. He's just like,
well,
this
no, like
guy.
I did that just because I don't want to be unfair to Iron and shareholders. Like it is. If Iron was the only thing that had fallen, the rest of the market was intact, it would be a screaming buy, and it would just be I'd be buying it. I'd be pounding the table, but that's not the reality we're in. So it's more of a sigh at myself for being like too rash and saying Nebius obviously is like,
yeah. Fantasy stock prices for one day. How are you spreading your capital? Palantir at $50, Nebius at $50, CoreWeave at $50, Nvidia at $100.
for one day, man, I don't know.
No, I mean he's just like pretend these are the prices. How are you spending your money?
Oh, okay.
Your portfolio allocation. Give me percentages.
It would be 100% Palantir.
Really, at $50, 100% Palantir.
Yes.
I would say like 90% of Nebius, 10% Palantir, maybe. No, actually 100%.
Why do you hate Palantir so much?
100% Nebius. I'd be all in at $50
on Nebius. Okay.
Yeah.
I mean, like it's really, really compelling there, but man, Palantir, it's a generational company. Nebius is a very good company. I don't know if it's generational. There are others that do what Nebius does. I wouldn't say as well, but they have more competition. Palantir, man, any rumors of competition are just so grossly overstated. And 50, yeah.
Pedro asks, as the mood changes towards frontier AI labs, you both think Nebius will change their approach of not prioritizing hyperscaler due to margins?
So Nebius is with the NeoCloud. I think that they're long-term customers. They're going to have some of the large hyperscalers. I think, well, they already have contracted, but I think for a long time. But I think primarily they're over time, especially as that NeoCloud continues to get more and more compelling, they're going to move a little bit further downstream into the mid-size, maybe small businesses as well. And I'm not saying like tiny companies, but that'll be a high margin, like you said.
Yeah, look, man, I think Nebius for servicing the hyperscalers, my eye is killing me. For servicing the hyperscalers, Nebius was doing that initially for the relationships, for the like validation essentially, and for the doors that it opened. I think at this point, Nebius has surpassed that, and it's just going to go to whoever's the highest bidder. If it's a frontier lab, if it's a hyperscaler, if it's anybody in between, a mid-market, if it's healthcare, if it's whatever, cool. Highest bidder. this is what we're going to sell our compute because the demand is incredible out there. Catherine, did you sell out of Air, Roy?
No, no. I the only thing I've been selling for a while on air has been covered calls. I took gains on like almost 2/3 of my position, but that's a while ago. Like for the range from 55 all the way up to 95. So
Answer this next question while I put in some eye drops.
what do I think about Uber? Waymo explores options in our partnerships with them. It tanked today. Is it a buying opportunity? Uber is one of those where I think it's a good company, and I don't think like robo taxis and obviously like Waymo, you can see right there, is going to suddenly make Uber be less valuable. I think it'll continue to compound, but it's also one of those where I don't think it's a great opportunity, like in the same way that there's some screaming buys on the market. I could be wrong with that, but the other thing with Uber too that you need to keep in mind, we'll have to see what they do from now through the end of the year as far as like execution as a business. So if you recall, they were caught up in this token maxing wave where they're not all the engineers, and I know some people that work at Uber. Shout out to one in particular. You know who you are. I don't know if you want me to say your name or not, but friend of mine. But a lot of the engineers here were just spending tokens to spend tokens, and they blew through their entire AI spend in April. So that might be one of those things as Dara comes in, like that just slows them down and slows down their execution, their efficacy, because they are restricted to I think $1,000 per employee per month, which is like if you're a software developer, man, that's not a lot. So yeah, I think if you're in it for a long term, I think it'll do just fine. I just think there's better opportunities. Yeah, Tom has the next question related to Uber. He says, "Do you guys own Uber? Its PEG ratio is around 0.75 right now." Yeah, I don't own it. It's a good company. I don't know if it's a great opportunity, but it's a good one.
With the amount of money that I spend on Uber Eats and Uber, rides, like I'm shocked they're not giving me free shares at this point.
Yeah, one of my sons uses Uber a lot as well. So
we'll talk after the show. We also didn't play chess this show. We said we were going to do.
I think maybe not this time because we're going a little bit longer with the Q&A, but yeah, maybe next time.
Yeah, we can do it while Q&A.
Yeah, I mean, if you guys want to see me just absolutely trounce and destroy it, you'll enjoy it.
Me eating a burrito on one hand, playing chess with the other, and answering Q&A while at the same time.
If you do that and you sacrifice a queen and you also are blindfolded, I stand a chance.
Yeah. Why is Iran bombing my portfolio?
It feels
you
like
and me both, sister. How many more losses does Meta have left to win? A lot more lawsuits left to win. There's a couple of key ones actually, so we'll see how those go. Qs and Nasdaq nearly down 10%. Is this a correction?
Yeah, it looks like it might be headed towards that. Yeah.
Heard this great take with respect to earnings. There's two analyses: are earnings good, and are earnings good enough? The market cares about the second.
Yeah, I think that relates to like whisper numbers. So you have the actual analyst numbers, and that's what you're actually comparing when there's beats. It's not based on beat on guidance or projections from the company. Analysts take that and they come up with their own numbers. And so if they're like wildly off and the numbers are wildly off, then that's a huge beat or huge miss, whatever. And it reflects on the company and the share price. So, but beyond that, you'll oftentimes get a like double or triple beat and you'll be like, hey, this is great. But there are what's called whisper numbers, and all it's like basically is like, well, this is what they're really expecting, though, shareholders, not necessarily just analysts. So yeah, I mean, and that's a fair take. Is are they good enough? Is this a company that is priced to or beyond perfection? And so like you can look at Palantir over the last year, the way it's performed with some of these absolutely ridiculous beats, some of the strongest share earnings that I've ever seen in my life. Like if you want an insane earnings call and insane numbers, it's Palantir. But were the numbers actually good enough? No.
I think I'm going to go with shawarma. Let's see. You guys have a thought about T1 Energy?
Yeah, You picked it up in the draft, right?
I did pick it up in the draft. It's not in the portfolio yet, though.
Okay.
I don't even know at this point if it will be.
Yeah. Do you have any thoughts on it?
No, not really.
Yeah. Yeah, it's one of those, like, obviously energy is going to do it is so vital right now. I've been looking into a number, including like some geothermal that one of my sons pitched to me, and I'm like, well, let me take a look. And it's I don't have any money right now, so but yeah, the reality is I probably would prefer Bloom Energy over T1. Just looking a little bit more into the resourcing of scandium there. I don't know if it's. I think that the short report is overstated, and the pullback for Bloom is overstated as well. They are critical. But yeah, T1 I know less.
This order has been placed. It's going to take 15 to 25 minutes to arrive. So that's pretty much where we're cutting it off, Roy.
Yeah.
15,
Yep.
last 15 to 25 minutes on the show. And let me put this on this screen so I can track my little bicycle driver guy. So I can see how much time we got left. And let's continue. Are they planning to be free cash flow positive in 27? If not, it's hard to see them break all-time highs. He means Google. I mean,
No.
it's fully within their control, right? Like, they're just choosing to invest more.
Yep. Yeah, they're not going to be profitable in 27 as far as free cash flow.
Well, then the market's going to keep selling them off, I guess.
Maybe.
CoreWeave down on Google CapEx increase. What's the bigger explanation? Dude, everything's down. It's not just CoreWeave. Do you believe RVI will recover?
That's Robinhood Ventures Fund number 1. There will be a number 2 fairly soon. Yeah, I mean, like, it's look at this. Let me show you how volatile this fund has been. It's a closed-end fund, so you can't just sell it whenever you want. I don't own any. And it's private equity specifically. So, like, look at this. From 25 was the entry all the way up to 75. Let me change that to price. It's wild. And then it's back basically to, did it start at 21? I guess it started at 21. But yeah, it'll recover over time. They picked some good companies there.
Yeah. Do you expect Nebius and CoreWeave to reach the same profit margins, or will they be different? No. Nebius is going to have higher profit margins.
Yes. Yeah, that's the Neo Cloud. It's some people didn't like the analogy, but it was the burger that's really, really good. Both of them have really good burgers. And Nebius is also selling value meals. And so they're trying to capture higher margin by making a combo, selling fries and...
It means the software. The software is the fries in this case.
Yeah.
Which expands more. This is like Tesla, right? Tesla is selling the cars, but they're also selling full self-driving, which is software, and it's pure margin for them. So Nebius is doing the bare metal, but Nebius is also selling the entire stack, which is margin.
And there's some drawbacks to that, but margin is not one of those. Margins are much better, and it's probably a stickier product as well for Nebius.
Yes. Yeah. All right. Kryptonite skips the line. How do you avoid Palantir traps? Every rally has been sold and peaked in October 2025. Add this question and remove whoever was the last question. Sorry, not sorry.
Thank you for your $5. Yeah, we'll still hit the last question though, but no, like the way I avoid that is just by being a long-term shareholder. That when I was buying Palantir initially through the world's slowest DCA, because I'm like, my sizing of my portfolio is too small. I want more Palantir. And then I added some shares. I had like 120, 125. I'm not planning to, when I'm buying those shares, what I'm not doing is saying, hey, I need this to do whatever in the next year. Those are for like 5, 10, 20 years out. And out of all my positions, like I would least likely ever touch Palantir and sell. Like I would if I needed the money or something like that. So short term, it's hard to say exactly where this it's going to go. Like we know what the company is just absolutely executing, and it's still not like dirt cheap, but I think it's around fair value. Like maybe it's a little bit on the high end of fair value, or maybe just past it. But yeah, if I'm buying shares for like 5 to 10 years out, what's the trap? It goes down temporarily.
Yeah. All right, let's drop that. Did SpaceX take away market share from the neoclouds by deciding to rent out its compute? Yes, but I think there's more than enough to go around.
Yeah, if you look at the actual price of the rental clusters too, it's not gone down since then. So I mean, it had to come from somewhere. But yeah, the reality is there's so much demand; it's relentless. It doesn't really negatively impact them. I think honestly, the way the market should have looked at it is the extreme price of the rental contracts that they were getting is just amazing, and the market should have been like, "Oh man, this is like really exciting for the neoclouds," but
Yeah.
it's short-sighted.
hmm And don't forget, we got news this week. I'm going to make a video about it, but we got news this week that Tavili, which is owned by Nebius, is working with SpaceX. Like SpaceX is using Tavili, so SpaceX is also using Nebius services. Um, what is my TikTok handle? It's the same as the existing handle at Fun of Investing, but on Instagram it's at Fun of Investing Clips, all one word, and you'll find all the shorts there. I'm trying to post like at least one short a day on either platform, but over the next couple of weeks, I'm going to be posting like 2 to 3 shorts per day on either platform. So if you're on Instagram or if you're on TikTok, then definitely follow there for some shorts. That's my shameless plug. You can plug Fiscal AI, and I'll plug myself.
Fair.
Okay, my portfolio. Oh, we answered this. So the passionate clips will become short. Genius. Yes, exactly. That's the whole point. I mean, look. Hopefully, it takes off, and then I can slide into Sydney Sweeney's DMs and Instagram. But it's a long way from here to there. So, yeah, follow me for more. Is Oracle better than Microsoft at current levels?
I would say probably Microsoft, but I mean, it's not actually an easy call.
Yeah. Yeah. I think Microsoft's a better company, but yeah, as a valuation concerns, I don't know.
I think I took Microsoft third round in the draft and Oracle fourth. So
It's a goodie. Is PayPal getting back into the S&P 500?
probably not. And
Only
then
if
with the
you want.
buyout rumors, I don't know that they would even, if they think that it's credible at all, that they would do that.
Yeah, only if you want the S&P to go down. Can we spend like 2 minutes looking at app on fiscal? Arya got me curious about it, and their metrics look insane.
Yeah, they do look
App
insane,
11?
and they're a great company. App 11 is one that I also took in the draft. So obviously I'm a fan. What I like about it, and Tevis left, so I can't throw this up there, is this the type of advertising that they do for the most part. It ensures that real human eyeballs are actually on the ads instead of with some of the web advertising. Usually they do a very good job of determining what's an agent, what's an LLM, and so forth, but that's not always clear cut. App 11 has been beaten up in terms of share price. It's up, of course, immensely in the past, but it's well off the peak this year. It's a little bit surprising in the midterm year because you do see an acceleration in terms of the revenue. Actually, let me go back real quick. PEG ratio is a 0.6. This is I believe, a 1-year PEG that they do here. And then let's look at the financials. So we can see total revenue. This is quarterly. And since you already pitched this, Tevis, I'll just say, hey, this is Fiscal AI. Duckhammer or anybody else, I have a link below in the description, and you get a free 1-week trial. So if you want to see these numbers, do more due diligence on your own, you can do that. It saves you 15% if you go forward with your subscription as well. And they're the sponsor of this video on my end. But yeah, we see like these are insane numbers. Now, part of the reason for the slowdown is more so just because they're coming against higher and higher comps. If we look at estimates that are going forward, I don't remember how many cover this. Yeah, we're looking at 20s. Anytime you're looking at estimates, especially in a quarterly standpoint, make sure it's more than like 5 or 6. If you're looking at 20, that becomes more credible, but you can see everybody is expecting continued acceleration in and through earnings. EPS itself as well looks quite robust. You begin to look at, now this is a smaller number, I believe, yeah, just 10 analysts that are looking at, if you're looking through June 2027, so a year out, That's a 5. Let's look lastly at multiples. And so let me remove all these metrics here. And let's look at, we should probably do forward priced earnings, I would guess, instead of the current. So let's do ratios. And then we're going to do forward. We'll just do forward PE. We could do price shares and everything like that. But yeah, if you look at it here, it's trading right now on a forward basis at 22. Let's zoom in just a little bit so we can kind of see where this compares since, let's say, December 2022. Then we can see it's not quite historic as far as a low in the price to earnings. We did see that back in 2023 when they were like beginning to accelerate their insane revenue ramp. That's one of the reasons why the price to earnings seemed like it actually lagged, not because it was bearish. So this could go down lower, but I mean, I drafted it in the draft. I think it's a really well-run company. It's a really good product, and I mean, midterms are not going to hurt them at all. But for whatever reason, the market's like, hey, this is software, therefore software is garbage, and so let's sell it off. So if you're looking for like a long-term position, make sure you understand the company and what they do. But I think it's really attractive here.
Yeah.
And I actually would prefer it over, well, I did take it over Zeta in the draft. I'd take it over the trade desk. I'd take it over pretty much any advertising play right now.
Yeah. All right. I'm getting hit with a nice little bit of sunshine. Just
Nice.
reflecting off of a building, the most dystopic shit you've ever imagined. It's like I can see the sun reflecting off of a building in order to get to me. Did we talk about SoFi earnings? No, we haven't. I suspect we will both be making videos about this and talking about this on Bootleg on Monday because they report earnings on Wednesday. At Roy, did you look more into M-Phase? I might buy back Uncharted 35 again.
Yeah, I haven't had time yet to look into it, but it looks really attractive here. I would again, like for me to be comfortable, I'd need to go and just catch up. But no, I like Baudry. I like the company. I like what they do. TJ Rogers, like he's great. It's just a very cyclical space, but I think it's less for two things. One is commercial. Commercial does differently for solar than residential, and it's less tied to rates. And then I also like the pivot towards AI and what's happening in the space. So I do need to look into it, but I don't have money, so I still need to look into it.
Yeah.
I also let me say one other thing with Enphase. When I got out of it, this was 2 years ago. I was thinking, okay, I don't know when solar will bottom. I don't know when it'll reaccelerate, but it feels like midterms, and this is a couple of years ago, historically it tends to flip from whatever happened 2 years ago with the presidential election. So if we have a big blue wave, they tend to be more favorable towards solar. At the same time, like we see the incredibly pressing need for power, and so I think a lot of things line up well.
Yeah. All right, let's continue here. Which companies are data center operators partnering with to build independent on-site power generation? What are the long-term debt implications of this capital expenditure? Yeah, they're partnering with Bloom Energy, T1 Energy, a whole bunch of other
Gas
infrastructure energy companies.
Installation, yeah.
It's
everybody across the board. Like power is such a critical need, and there are some that are like everybody's like, yeah, power. It's a huge choke point. It's a huge concern, and at the same time, like we might actually, I think we might be underappreciating the need for inference, and as a result, even now underappreciating the huge demand for power. And like I listened to a really, really good interview on LNG specifically as it relates to this. It's interesting to see what their projections are like on the Henry Hub prices for the LNG in the United States. It's going to blow people's minds if it happens that way. I hope it doesn't, because a lot of people get hurt.
Mm-hmm. Patrick says, please discuss SoFi on Monday. 15% of my degenerate portfolio. Yeah, we will both make videos on SoFi. I need to make one this weekend, maybe, along with a Nebius video that I should have made like 3 days ago. So bear with us, guys. ServiceNow took up all my mental energy. Also, this week has been like a record. I've done 4 live streams this week. What?
Awesome.
That's crazy. That's like double my weekly. But yeah, making up from Europe because I need to pay the rent, bro. Um, I don't know if y'all went over SoFi. Any videos coming out on it? Yes. Are we still? Am I still buying Nebius? No, but I am selling cash secured puts and covered calls on it. So if that counts, then yes. Any recent good movies worth watching over the weekend? Tevis has no TV, so for Roy and chat.
I mean, like, I've heard The Odyssey is amazing, so go see that if you haven't, if you're into that. I do want to see it. I don't know that I will in theater. The one that we do plan to see is the new Spider-Man movie. I like Tom Holland. I love the Spider-Verse, so yeah.
How do they keep making those things, man? Like there's gonna be a gazillion of them. Like it's a pretty simple story to tell.
Well, with the Spider-Verse, it's deep. Although, like, oh man, like it's just for like families and everything. It's such a good series. Like they've done a really good job.
Mm-hmm. All right, my food is arriving in 7 minutes. Shall we? And we're out of questions. Shall we do a little bit of chess? Yeah, I've heard good things about Obsession. That's true.
Yeah, if people want to see me get destroyed in chess, I guess you guys can stay. So.
Yeah,
let me pull it up the thing here.
Yeah, this is a little treat because we got so many freaking donations. And yeah, let me send the challenge to Mr. Crossroads. I love how you have like a profile picture on your chess.com thing.
Yeah.
I got some shawarma for dinner. So let me share my screen here. And then this is Roy and I playing chess.
We'll do one game, I guess.
Yeah, there we go. Yeah, I mean, we can play whatever. Like, I'll answer questions. We can play, and until 8:24, because that's when the food arrives.
Yeah, don't
or
see
sooner. Oh, I challenged you.
Challenge for some reason.
Okay, let me do it again. $10 minutes and ranked send challenge.
Okay, I see it now.
And we're a little bit mismatched in terms of ranking. Yeah, Westworld, Game of Thrones, House of Cards was great until like the last season. A lot of them like really tanked in the last seasons, but yeah. Bet on a winner. I don't think we're gonna be gambling.
Probably the guy has double my rating. It's not that close, so yeah.
Are we going to apply for the Monopoly reality show that Steve is applying for? I don't know what this is. I haven't talked to Steve in like a long time. But I got to talk to that guy. Miss that guy.
Yeah. Oh. I was like, wait, what are you doing? And like, yeah, that's
SoFi
right. You're
or
giving me a piece.
Menard to 25 first. I think SoFi is going to get to 25 first. Let me triple up my pawns to make it extra fun.
Yes.
I think SoFi is going to get to 25 first. Who's black and who's white? That's kind of racist. Weird. We don't tolerate that kind of behavior here. Yeah. I have Oracle Leaps for January 2028, $160 strike. I'm thinking of rolling it down for, hold on, Roy just moved, for a better strike. What do you guys think? Let me see what is Oracle at right now. OCL. 115. You have 160 strike for January 2028. Rolling it down. Why don't you just buy more? I mean, like, if you're already bullish on Oracle, then you can always just buy more. So yeah, I don't know. Let's do that. Thank you, Highland, for being here and for the donations. Very generous. Thank you for the 5 gifted memberships. Again, this is I think this is like my most donations on a stream. Um, but yeah, really appreciate it all. Very much appreciated. Let me see if I can make this actually easier for you guys to see. That's better. That's much better. Yeah. Ooh. All right. Let's go there. I doubled down at like 140 already. Yep. Has Roy ever beat Travis before? Yeah. Roy definitely has beat me before. He might beat me at this game, honestly.
With a big asterisk, yes.
I mean,
he gave up a queen, so if I win, it's with an asterisk.
Yeah, I mean, man. A win's a win.
That's a blunder. I don't know why I did not move. Yeah, before he castled, in case you're not new to chess, it's called a fishing pole attack, and so I would have taken his rook for free.
How did he take his own queen? I'll rewind it for you here. I basically just moved it up here in the path of the bishop, and just sort of gave it up.
Yeah, it's not ideal here.
Yeah, I really appreciate everybody still being here, watching us beat degenerates. We're going to be wrapping up the stream in a few minutes here. But this has been a lovely stream. Therapy session for the market going red. And really appreciate everybody who's still here.
I don't know if this is going to work out. It probably won't. Yep.
Is now a good time to buy CoreWeave? Yeah, I would say it's definitely a good time to buy CoreWeave. Express Investing says, I can't believe I'm watching chess. I mean, technically, you donated, so you technically paid to watch chess. How do you feel about that?
That's hilarious, actually.
Yeah.
It's rough.
Needs a 10-second timer. All the streams should end with chess. Yeah, I mean, I don't disagree. What do we want to do, guys? let's do this, I guess.
The pin, yeah. It is over. And there's the rook.
Stalemate. Yeah, I mean, it could be. He'll have two pieces to just my rook, so it'll still be fun. Yeah, do backgammon next time. Yeah, could be fun. I don't know if I can still win this, honestly. I think I just messed around too much. But we'll see. All right, I think my food guy's here, so I got to go pick it up in just a second. Roy is up 3 pawns. Did you watch The Odyssey? I got tickets for the 70 millimeter IMAX, but Monday at 10 a.m. Yeah, I mean, honestly, man, like I think I would only watch it in the IMAX. Ooh, disgusting. Um, I
GG.
haven't seen it yet, but I should definitely go and take a look. When is the data center monthly / bi-weekly? I mean, we just had one. I say we like it's my show, but Roy just had one recently, this week, so about in 4 weeks from now. In what order of buying SoFi, BM&R, or Zeta? I mean, it really depends on like what you think is going to be a long-term hold. I think SoFi is definitely the number one here. Zeta probably second, and then BM&R I would say third. Is there a stream tomorrow? No,
I
there's
know
no
you've won. Oh,
tomorrow.
you're going to do it with a rook? Come on, man. Now, if you're new to chess, I might have a chance of getting stalemated, but yeah.
I should have just did a knight so I can just
Well, then it would be a stalemate.
yeah. Yeah, how to mate with just rook and king. That's fun.
Make this box smaller. You get the king lined up across the king, and then you attack. You just have to be careful about not stalemating.
I still might stalemate, to be honest with you.
I've done it before, and it's so frustrating. Like, yeah, just move the king over. Yep, king over.
Oh shit!
Oh, what the world? Oh no! Oh, that's worse. That's terrible.
Stalemate opportunity. Yeah, Battle of the Ages. I think we're gonna end this on a draw.
He gifted me the draw. It's a win.
Gentleman's game.
A rook and a king is always a win at the end.
And I think my food is here. So thank you guys so much for watching Fiesta Friday. Hope you guys had a nice little therapy session from this stream. Thank you all so much for the generous donations. And we will see you all on Bootleg on Monday. And have a good weekend. Touch some grass. Forget about the market for a while. Read a book. And we'll see you all on Monday. Thanks again. Goodbye.
Take care, guys.